Hi everyone, it's Marissa here from Rise High and
Lockie Turner from Turner Real Estate.
And of course we're here to bring you the Adelaide property market update, and it's a special one today because it's July, start of a new financial year. We've obviously just had the end of a financial year, 2024 financial year's just ended. How are you feeling about the new financial year, Lockie?
Fine. I think, I don't know whether you get older or wiser or you've sort of seen all the media, but it seems like the end of the world sometimes, but it just, bumbles along, and I think we'll be okay. There's always a headline about an interest rate or or something happening in Ukraine or something going on, but I think the fundamentals are very much the same, and I think they are going to continue. Just sort of low stock levels, high demand, low vacancy rate. It's still going. I think if I could have a look at the notes I've got here.
Absolutely.
I think, if we look forward, it will be, the market will pretty much stay as it is and supported by 1.5% annual, with the population growth that's sitting at 1.5%. Infrastructure projects are huge, and possible rate cuts. I think is probably the big one, and that really plays into your game, doesn't it? And I think they will probably go down. We did have a rate cut last month, and
we
probably will expect a few more.
Yes, that's right. So we did have the RBA has cut the rate a couple of times now. They did meet again on the 8th of July and decided to hold the interest rates, but it was very clear from their messaging from that they were just waiting for more data. The trend is still moving towards and suggesting further rate cuts.
Yep.
So like you said, we've got an environment where population's growing, supply's still low, demand is still incredibly high.
Yeah.
So we are still seeing that upward pressure on prices, aren't we?
So the other reason for a rate cut, I think, is that inflation is under control.
It's getting under control, yeah, absolutely.
Wanted, so that's all sorted out now. So I think with that under control, we should see another rate cut.
Yes.
I think that the growth
well, many economists were expecting a rate cut in the last meeting, and it was quite surprising that it didn't occur. And that was just because of the timing of the data that the RBA were looking at. So yes, it is. Many are expecting that there will be a rate cut soon.
So an outlook for buyers, and there's all sort of different groups. There's current owners of property, there's buyers, there's tenants, and so on. But a current outlook for buyers and investors would be that money to borrow will very likely, as the year goes on, get cheaper.
Yes.
Which will further fuel the market. So if you're a current property owner, wonderful. We would say the market will remain strong.
Yes.
And if you are thinking of selling, certainly our sales team here, we sell about 400 houses a year, as well as all the properties we manage, but the days on market are still 2 to 3 weeks. It's still a very, very strong market. So for property owners, we see that that the prices are going to remain in the market, if not continue to go up a little bit. In fact, this is a bit of a wrap of the financial year just finished, and they went up almost 10% last year in Adelaide, making it the strongest, or one of the strongest markets in. Property's
had a really great run for many years now in the Adelaide market, hasn't it?
Yeah, it is. So if you're an investor, what does that mean? Well, if you own property, you're getting the capital growth. The yields are, the yields are pretty good too. Currently, the vacancy rate is at 0.7%, which is one of the lowest in the country. The median weekly rents for houses are $650 and $590 for units. Extraordinary. We think this is occurring because units are the most affordable property now, and so there's a lot of inflation in the values of units. We've sold 3 in the eastern suburbs in the last month or two, and they're all getting in excess of $700,000 for 2-bedroom strata-titled units. For investors, yields are quite good too, because you're getting the capital growth of the property, but they're 3.7% for houses, and again, units are the star, with yields of 5.7%. So historically, yield for residential property sits around the 3% mark. So you're seeing almost 4% for houses, and what I say there, almost 6% for units.
Yeah, and when you're getting that kind of yield, and you're looking at interest rates that are actually very similar to that yield, it's actually a lot more affordable for investors from interstate to actually invest in Adelaide. So we're not only getting the demand and the increased demand from the population growth, but we're getting the increased demand from interstate investors really wanting to invest in South Australia. They see that our government's doing great things. They see the infrastructure spend that's going on. They see that the economy here is really going along nicely. Plus, they're getting these nice rental yields, which is almost making their properties, close to neutral to hold without having to dig deep into their pockets to hold it. It's kind of a no-brainer. So you can kind of see where that demand for Adelaide property is going to continue to drive price growth in the future.
Yeah, and I think, well said, and I think the final point, or the final sort of group out there are the buyers, or the first home buyers, or people who are looking to buy the home for the first time. Always a good sign when interest rates become cheaper. But what normally happens is it also spurs the values of the property. They go up a bit as well. So, but with money being a bit cheaper and with 40-year loan terms now,
Yes,
30,
that's right.
so you'd be lucky enough to have a loan for almost your entire life, I'd say, which is great, isn't it? But they're 40 years now and interest rates are a bit lower. That will help. I would suggest as well, as I've often done over the years, don't buy your dream home first.
Very good advice.
Don't do it. You can rent vest, which means you just buy a property in a more affordable location, buy a unit, do all those sort of things. Just get a foothold in the market. Will be a bit easier to do with money being, a little bit less to borrow.
Yeah, and not only does it make it cheaper for your loan repayments when the interest rates come down, but actually reducing interest rates also increase people's borrowing capacity. So if you've been talking to your mortgage broker or your bank and you haven't quite been able to borrow what you've wanted to borrow to buy what you want to buy, with reducing interest rates, it actually expands and grows your borrowing capacity. So with every rate cut, your borrowing capacity actually increases. So once again, that's going to help people get into the market that weren't able to get into the market, say, six months ago, 12 months ago. Now with the rates coming down, they're going to have a chance to sort of have that increased borrowing capacity, which is going to give them a chance to get back into the market. Going along the theme of first home buyers, there's also some really great, government grants, some great incentives. There's some really great lenders that we have access to at Rise High that are, lenders that you may not have heard of that actually do some really special things for first home buyers to help them get their foot in the market and help them start their journey in property. So it is a really good time to buy because the market's only going to continue to get stronger from what we're seeing with demand and supply. Like you said, it's a good time to sell because it's really easy to sell at the moment.
And it's a good time to be an investor in Adelaide.
And it's a great time to be an investor.
And often what I've heard over the years is that it's a bit like the stock market, and I'm not saying the property market is like the stock market, but a lot of buyers try and pick the top, pick the bottom. I'll wait, maybe interest rates will slow things down, but it just won't. The market's strong, the fundamentals are there that with low supply, high demand, lower interest rates. So really, there is no time to hesitate. Just if you want to buy, just get into that market. Selling, the conditions equally are very, very good too. Great for investors. So it's all happening at the moment.
Absolutely.
And, we're here to help. So if you do buy a property and you want it managed, that's the key thing that we do at Turner Real Estate is the property management services and selling as well. Marissa's the key though at the beginning because you really want to enter the market all prepared. And that mainly means having your money sorted out and getting pre-approval for loans and so on. And that's the other sort of best tip we can give you is to get all that in order because you can't do much until that's sorted out. Absolutely.
And not only do you want to get your finances in order, but it's really important that you line all your ducks up in a row. Make sure that you're getting your rental. If you're an investor looking to invest, make sure you're getting your rental appraisals. We do rely a lot on the Turner team to help us with those. Make sure you're getting really good advice, good property managers, and also if you want more strategy behind your property investment decisions, really excited about the Rise High Property Investor Plan that we now offer at Rise High Investor to actually help investors plan out their property investment journey and reconstruct it from your goals looking back to how do we get from here to achieving your goals in your desired time frame. So having that strategy behind your journey is really helping a lot of our clients to be able to see the bigger picture and see how the decisions they're making now will actually give them what they need and want for their family in the future.
And I think part of your service there with the investment planning and goal setting is that, yes, you've got to sort your money out, but I think the key part of that, and we've had a chat about something I wanted to do, I just got to find the money, but it's actually what entity you buy it in.
Yes.
So that's another key thing. You don't necessarily just buy it in your name.
Yes.
That's what most people would think, but you might buy it in a trust if you've got one of those set up. You might buy it in a self-managed super fund. You might buy it sort of in your partner's name. You might buy it jointly or not. So there's all those sorts of things. So just being a little bit clever with tax and what will work best for your situation. So think about the entity you'll purchase it in. Get your money together and then start hunting around. Again, as a tip, Turner Real Estate is one of a handful of agencies that are very organised these days, with only launching properties on their websites first. We now, with all of our rent properties, we're getting 50, 60,000 visits per month. We've generally at any one time got about 50 properties for rent. 20 of those are just on Turner and nowhere else. Not on realestate.com.au, not on Domain, but same with buying. There's plenty of agencies, Turner's one of them, called Turner Exclusive. Go to our website first, see what we've got there, because there's a lot of properties just on there and not on major portals. We're just about to launch a unit group, which will be on Turner Exclusive very shortly in the next week or two. So
that's a great tip for buyers and
it's
tenants.
Not just Turner. I'm not trying to give myself a plug. I'm just trying to say this is what's going on. Register yourself as a buyer with some of these more organised and bigger agencies that are selling off their own platforms first. So yeah, it's another tip I'd certainly have.
So that was lots of tips today that we shared for buyers, sellers, investors, everyone. As always, we're here to help. So any questions that you have for the team at Turner or the team at Rise High, we'd love to help you out. We'd love to help you on your property and finance journeys. Thank you so much for tuning in. We'll see you again next time. That's a wrap for our June 2024 market
25.
update. It's now 25. We're in 25, aren't we?
Right.
June 25. June
quickly.
25 market update. So happy financial new year. Happy new financial year, everyone, and we'll see you again next time. Bye.